Obviously, we're still watching very much the FX angle in all this. And Garfield, it really just seems like the dollar can do no wrong at this point. How much more upside is there for the greenback?
Well, yeah, I was assuming David, whose Dixie Chick reference was saying the dollar isn't ready to make nice and not ready to back down. So that does seem to be the case. Yeah, there are a lot of reasons for dollar strength and not much when it comes to dollar weakness. After all, one of the surprises when you look at what's going on is that Treasury yields are staying lower than that 3.5% level they got to, and it seems a struggle for them to get much higher, and yet the dollar seems to have no problems going up very strongly. You see it's getting close to parity against the euro, and that's because the Fed is so determined to fight inflation. It's going to hike by 75 basis points this month. There's a decent chance it will do so the next time it meets in September, and meanwhile, the ECB is being dragged kicking and screaming towards probably a small series of rate hikes. European recession fears are much more intense than they are for the US. So there's lots of reasons for the euro to come down that have nothing to do with yields. In recent months, yields in Europe have actually become closer to US yields. That hasn't helped the euro. And then similar sort of things are going on with Japan, not with the war in Europe, but with the fact that ultra dovish BOJ policy is keeping the yen under pressure. That's two enormous, those are far and away the two most traded currencies against the dollar. So when they're both weak, that makes it really hard for just about anything else to get strong against the dollar. You just have constant dollar buying coming from some of the biggest buyers out there in the FX markets.
Garfield, it takes us into the second-order effects of a weak currency that probably goes into the thinking then of central banks. I mean, a weak euro, a weak yen exacerbates that inflation issue because they're importing that into them. How do you think the ECB and BOJ are looking at these?
Well, I mean, the BOJ is looking at the idea that it can ride this out, and in particular, seeing as the assessment from Kuroda and his colleagues has been that they're a long way yet from sustained 2% inflation, which is their target. They don't think that the current levels are sustainable because they're being driven by these extraordinary circumstances. And therefore they're reluctant to step away from their yield curve control policy, which means they're buying lots of JGBs, and that's helping to feed into yen weakness. So that's the Japan issue. In Europe, it definitely is pushing ECB more towards the idea that they need to raise rates. They just have this difficulty that they don't want to go tipping the European economies further into recession than they might otherwise be. And there's also the worry of what happens to the more peripheral yields like Italy and so on, and trying to come up with ways that they can raise rates without destroying some of the non-core bond markets.